In this video, guys, we're going to look at why waiting for confirmation might well be killing your gains. Hey traders, warm welcome to you. Thank you for tuning in. Okay, so confirmation, right? We talk about this a lot with setups and strategies. We say, oh, wait for confirmation. We need to see this and see that. Now, it's possible that waiting for confirmation is killing gains. Why? Because there are different market environments, and different market environments require you to take different actions. Let me explain. So let's look at two scenarios here. We've got scenario number one and scenario number two. Scenario number one is a kind of range bound chopping market, and you're looking for a long at support for a rebound back up to your profit target here. This chart number two, you're looking to go short in a weak market for a continuation of the trend. Let's look at both scenarios now. Number one, the market has come down, it's got some support here, breaks through the support, comes back up and looks like it's about to rally. Now, this is where we can wait for confirmation, because we need to see a flip in supply demand, so we want to wait a little bit more. We don't want to be buying here. That's no good because we don't know how low this is going to be. So our confirmation that the long is active is going to be perhaps when we cross over this level, or perhaps when we cross this pullback, we have a pullback and we go above the high. That is confirmation. That is, to me, that's acceptable because you've got lots of meat on the bone still. You've waited, you're at an extreme, you're not fading the extreme just because it's gone through the low, because this thing could fall through the floor. You need some kind of confirmation that you want to pull the trigger on it, and that confirmation might be the pullback there. So it's not the low, but you've waited for some kind of supply demand balance shift again back in your favor before you've pulled the trade. So that one gets a tick from me. Let's have a look at number two. So number two, we've got a downtrend and we want to get short. Now, if we said, oh, I don't want to get short, I want to make sure it's really weak before I get short. I need to make confirmation. I want to see it break through that support level before we go short. Now, the danger you have with that is that by the time you take the trade, you are too late into the move. Now, of course, if you're in a brutal trending down market, that's going to fall to the floor. You're going to make lots of money if you're short. But majority of the time, this may be in, maybe it's chopping about a bit, maybe it's not quite as clear, maybe it's just broken out already from a bigger range. Something normal in trading, kind of it's been in a congestion, it's broken down. If you start selling short here, you're way too late. The odds of you having a successful trade are diminishing the further and further it goes. Not under every circumstance, but a lot of circumstances. So if you say, hey, we've gone down here, I want to wait for confirmation for us to break through there. I want to see that pullback and break through that pullback there before I do it, just like that one, but on its head, it's too late in the game. You now want to wait for a bigger counter trend move and fade it on that. So whilst this still may be a short, to wait for confirmation, oh, we broke through, now we broke through, we pull back and we've gone through, yes, I want to go short. Of course, sometimes it's going to work for you, but this is the kind of one where you want to preempt this with something. Preempt that break so you're on the break. Or if you're going to trade the break, wait until you get perhaps a pullback to it and then look for a turn so it turns into a different trade. So you've still got the overall thesis of, hey, it's going to go down here, it's going to take out loads, it's going to fall through the floor, we're going to make loads of money. But instead of chasing it here and having to sit through a pullback that goes all the way up and down, you say, okay, I don't want to wait for confirmation on the weak side, I want to wait for a counter trend move and then let it turn over, and then I can use my confirmation game. Right, then I can wait for my confirmation, or I need to not have confirmation and just go for it at some point where I think the risk reward ratio is good. Perhaps that is a bear flag position here. Perhaps that is after the break, when you see some mileage, when you see earlier on the move, because the later you leave it, the less likely it is to work in a lot of circumstances. I know some circumstances that's completely false, but that's trading, guys. We just take the generalization and hope we can work within those parameters. So there's a distinct difference there. So just check with your trading strategy that confirmation isn't hindering you. The way to check this is to look through your journal. I hope you're journaling. You look through your journal and you see, am I a bit late to the moves? Am I chasing a lot of moves? Okay, these are the ones that I'm getting stopped out on. Well, let me see the chart pattern. oh right, I tend to be chasing it a bit, but my rules say I need to wait for this. Okay, now I need to refine the rules. I perhaps need to wait for a counter trend cycle. I perhaps need to go a little bit earlier and take a little bit more risk on the deal, find something that highlights this bearish move rather than waiting for that. That still works nicely, but this one needs a bit of tweaking. So confirmation can be good. In this example here, I think it's sensible to wait for some kind of confirmation that the buyers have stepped in. I don't say waiting right until the top, but I think that's good. But then in other ways, you've got to kind of ignore it and just go with where the risk reward is and take a crack at the trade. Strategy dependent, setup dependent, market conditions dependent. Just something to consider. All right, guys, see you next one. Take care.